Here we are on the New Zealand dollar 240 time frame, and this is a trend continuation trade I've got in using a 3-bar reversal. What I'd like to do is let's just remove the orders and do the higher time frame analysis. So we'll go out to the daily time frame. Very simple trade this. So if we look at the daily time frame, new structure low, outside return, 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 anticipating a new structure low. Now I have only just got back and seen this trade. I could have entered a few hours ago, but what worried me was this long wick here on the daily time frame, indicating that we could go a lot higher, and that was my initial thought. However, if you look at what's happening with today's candle, we've sucked all the way back, and we've got actually just 1 hour to go, thinking about it, because the clocks have just changed. We've got 1 hour to go, and if it closes like this will give us a perfect doji the other way around. And so if we go to the 240 time frame, the more confluence we have on the different time frames, the better. And so if we look here, what price did, we came down, outside return, new structure low, outside return, new structure low, outside return. Quite importantly, if I put a structure level on here, this level here was the previous outside return. In fact, if I put it up there, you can see that we've not closed above it, and what we've done now is put in a lovely 3-bar reversal. So we had a move higher, followed by a doji, followed by a lower low, lower close, indicating here that we are going to see rejection to the downside. So a very nice trading opportunity this. It does mean that my stop in this scenario doesn't need to go an ATR above the high, it only needs to go a few pips above it. So I've actually gone, I think, was it 3 pips above the high here, 4 pips above the high, because this is such a strong selling signal that if we came down and then stopped and went back up again, we're probably going to go higher. But this is indicating really that we are going to be pushing lower here. So for the video, it does mean that I'm risking here 34 pips, and target ones were 60. Because it is trend continuation, I'm playing for a retest of the very lows here, and target twos are actually the closes of the daily candles at 85 pips. So that's the trading opportunity. And we're back for a final update on this trade, and I did delete off all the workings out by mistake, but nevertheless we had we had this. It's just lost for 35 pips, looking for a trend continuation to the downside. We just take a quick look at the dailies and show you this as well. And if we just delete it off, I'm pretty sure I said in part of this video that we had this rejection candle here, but at the same time we'd put one up here, so it's certainly a decision point. We had a signal to sell, we sold. Unfortunately it lost, so there we go, minus 35 pips.